What if I told you the secret to a healthier portfolio might be hiding in your medicine cabinet? No, I'm not talking about hoarding aspirins. We're talking about one of the biggest names in Big Pharma, Merck and Co. Today, we're giving this stock a full checkup to see if it's a wonder drug for your wealth, or if it comes with some nasty side effects. Let's get our diagnosis. Welcome back to EPK Capital's YouTube channel, where we unravel the mysteries of the stock market, one company at a time. So, who exactly is Merck and Company, and who's been steering this massive ship? Well, Merck is one of the grand dames of the pharmaceutical world, a global healthcare leader that's been around longer than your grandpa's favorite armchair. Founded way back in 1891 in the US, after originating in Germany centuries earlier, talk about staying power. They're all about discovering, developing, manufacturing, and marketing a wide range of innovative health solutions. Think prescription medicines, vaccines, and animal health products. As for who runs it, they have a robust leadership team, with Robert M. Davis currently at the helm as chairman and CEO. This isn't some fly-by-night operation. It's a well-oiled, highly regulated machine constantly striving for the next big medical breakthrough. Now, let's talk about the numbers, because let's face it, that's where the real story often lies. We've peered into Merck's last decade of financial reports, and here's the Cliff's Notes version. Revenue and profit growth. Merck's revenue has been a bit of a rollercoaster, which isn't entirely uncommon in pharma due to patent expirations and new drug launches. However, overall, they've managed to maintain a strong top line. Profit growth, while also fluctuating, generally shows a resilient company. We're not seeing explosive tech-like growth, but steady, pharmaceutical-grade expansion. Debt levels. When you're a colossal company developing life-saving drugs, you're going to have some debt. The key is whether it's manageable. Merck's debt levels are substantial, but they're generally well managed relative to their cash flow and assets. They're not exactly living paycheck to paycheck, if you catch my drift. Profitability, margins. Merck's margins, particularly the gross profit margins, are usually quite healthy. Developing a new drug costs billions, so when one hits, the profits can be significant. However, R&D and marketing expenses are also astronomical, which can squeeze those net margins. It's a high-stakes, high-reward game. Alright, let's zoom out and look at the stock chart, because even in value investing, knowing what the crowd is doing can be pretty insightful. Over the long term, Merck's stock has shown a general upward trend, albeit with its fair share of bumps and wiggles. We've seen periods of strong growth followed by consolidation. Looking at the support and resistance levels, Merck tends to bounce off certain price points, suggesting some investor psychology at play. And the Relative Strength Index, RSI, well, it occasionally tells us if the stock is looking a little overbought or oversold, like a tired puppy after a long walk, or one hyped up on too much sugar. Currently, it's hovering around a neutral zone, suggesting no immediate extremes. Now for the moment of truth for all you value investing purists out there, the Benjamin Graham valuation. For those unfamiliar, Graham was the godfather of value investing, and his methods help us determine if a stock is trading below its intrinsic value. Using some simplified Graham-esque calculations, considering Merck's earnings, growth rate, and a dash of magic, okay, maybe just some standard multipliers, Merck currently appears to be, well, it's often hovering in the fairly valued to slightly overvalued territory. It's rarely a screaming bargain according to Graham's strict criteria, primarily because established giants like Merck tend to be pretty efficiently priced by the market. It's not a hidden gem in the rough, but more like a polished diamond sitting in a well-lit display case. So, should you jump in or run for the hills? Let's weigh the pros and cons, the bullish roar versus the bearish growl. The bull case, reasons to be optimistic. Strong pipeline. Merck has a robust pipeline of new drugs in development, which is the lifeblood of any pharmaceutical company. A blockbuster drug can send the stock soaring. Established brand and global reach. They have a globally recognized brand and distribution network, giving them a significant competitive advantage. Dividends. Merck is a dividend payer, which can be attractive for income-focused investors. Who doesn't love a little extra cash? Defensive nature. Healthcare often performs well even during economic downturns, as people still need their meds. The bear case, reasons to be pessimistic. Patent cliff. The dreaded patent cliff is a constant threat. When key drug patents expire, generic versions flood the market, eroding revenue. Regulatory hurdles. Developing and approving new drugs is a long, expensive, and risky process fraught with regulatory challenges. Competition. The pharmaceutical industry is fiercely competitive. Everyone wants the next big cure. Lawsuits. Pharma companies are often targets of lawsuits, which can be costly and damage reputation. Before you make any hasty decisions, let's do a quick, important checks rundown. Any skeletons in Merck's closet? Like most large pharma companies, Merck has had its share of controversies and lawsuits over the years, related to drug side effects, marketing practices, and patent disputes. It's important to research these, but generally, they are part and parcel of operating in such a litigious and regulated industry. Globally, Merck is a titan. They're a major player in virtually every corner of the world, contributing significantly to global health initiatives, particularly with their vaccines. Their influence spans developed and emerging markets alike, making them a truly global enterprise. We've journeyed through Merck's history, financials, stock chart, and future prospects. So, what's the verdict? Merck & Amp Company is a venerable pharmaceutical powerhouse with a solid foundation, a commitment to innovation, and a global footprint. Financially, they show resilience, though their growth is more steady than spectacular. From a technical perspective, the stock tends to move with the broader market, and a Benjamin Graham valuation often places it in the fairly to slightly overvalued category. Like any investment, Merck comes with its own set of risks and rewards. The potential for new blockbuster drugs is exciting, but the ever-present threat of patent expirations and regulatory hurdles keeps things interesting. Ultimately, whether Merck fits into your portfolio depends entirely on your investment goals and risk tolerance. We're here to provide the insights, not to tell you what to do. Disclaimer: this video is for informational and entertainment purposes only and should not be considered financial advice. Investing in stocks involves risks, and you could lose money. Always do your own thorough research or consult with a qualified financial advisor before making any investment decisions. We are not financial professionals, just friendly AI avatars who love crunching numbers. Thanks for tuning in. Don't forget to like, subscribe, and hit that notification bell so you don't miss our next deep dive. Until then, happy investing, and may your portfolios be evergreen.